What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, the QQQ, and a couple of other tickers. I'm also going to break down my view of the cycle theories out there about how the market tends to move. But please note that I am not a financial planner, so make sure you take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed 15 in total, not to mention an 8.1% APY. Anyways, for the markets, I just want to say that right now we're looking at this double top leg structure developing on SPY, and we have some major catalysts coming out that could affect how we end up moving with that. So for Wednesday, September 11th, we have the CPI report coming out. That's going to be one big catalyst. Then we also have FOMC on September 18th, and the Fed should be giving us our first rate cuts. Looking at data so far, that's the most likely possibility. The market currently thinks there's a 70% chance we get a 25 basis point cut and a 30% chance for that 50 basis point cut. There's a 100% chance we get a cut according to the markets. So that's what the market's basically expecting. So, what's happening from here? What is my view of the way things are moving? Do I think there's going to be a crash or anything like that? And I think that the best way we could look at the market would be based off what our technicals are giving us and also based off different factors such as where we could be in terms of a cycle. So one thing you'll know is that the market tends to move in interesting cycles. If you don't believe me, just look at this. There was a bearish cycle right here from the very beginning of April when we saw this big dip. Then we entered a bullish cycle, right? We started the uptrend. We entered the cycle. We started off strong and then dipped a little bit before we continued. So this was bullish. The second cycle was bullish. Third one was in the middle. We pumped and then dipped a little bit. So you could see how this kind of followed this trend. But then the pivot point was this cycle right here where we continued to pump again. We continued to pump again. So these were two bullish cycles. We straight up just pumped throughout the entire cycles. And then during this phase, we hit a bearish cycle as we got this big sell off in August. We entered a bullish cycle as we got this big rally going into the end of August. Then we entered another bearish cycle again. So you guys can see how well this is aligning with the price action, right? So the question is, are we about to take a while to get this balance? You know, this next cycle aligns with FOMC really nicely, or are we about to see something very different? So, what is my view of the way this is going to go? I think that it's very important for us to look at some very, very key levels. As you guys can see, if you kind of like ignore the cycle for just, actually, if we just keep the cycle on for a second, I'm just going to keep the cycle here while I do this. If you look at the key fib levels, okay, you will see that we basically got this bounce very close to our 0.786 retracement from this initial bottom right over here that was made, right? This was a perfect 0.786 bounce when we got this initial sell off in August after we got all the negative news that was coming out. Uh, and then if we go back to the cycle, you'll see that if we were to do the same thing with this fib level right over here, if we take the high right about here, this aligns very nicely with something else. So we're currently about to be approaching the zero point 0.5 retracement area at 538. And sometimes you do tend to see bounces between that area of support and our points, our 0.382 retracement as well. I personally think that our best move would be to be very patient with this in the way that this has been panning out. So I think that this 538 area, the zero point 0.5 retracement zone, is going to be very important for us. And I think that we're going to be watching to see how this ends up developing, at least from here. So we're going to get a pivot point. It's either going to be CPI or FOMC. I presume one of those is going to cause a bounce. Whether we dip like this to the point 5 retracement, whether we come down to fill this gap for Wednesday, and maybe we start this like pivot point and then officially start this next cycle to the upwards direction because of FOMC. This is one possibility. Or what could be happening is we just maintain our bearish stance for another week and then we get the bounce after FOMC. But what's looking like is after FOMC comes out, after the Fed announces this cut, okay, the market's going to likely be a little bit bullish for a temporary period of time. Normally, when the market is in cycles, September tends to be bearish in a way where we start off strong for the first 2 weeks and then we turn bearish for the next 2 weeks, right? The first 2 weeks of September this year were actually a little bit different. So far, September started off a little bit more bearish, and the next week could be in another very, very interesting place. So I think we're going to get an opposite reaction from normal. Usually September starts off strong, then we turn bearish for the second half. I'm thinking that's going to be the opposite. I'm thinking that we're going to start off weak. We're already on a very, very weak start to September. it is possible we dip down to fill this gap, then we get a little rebound for the end of the week. And then FOMC could be the big catalyst to determine if we continue this dump. But the next cycle could completely flip the switch because it aligns very nicely with this FOMC period. So FOMC could be the thing that switches everything very, very nicely. And we may see a temporary relief rally for 2 weeks until we get to the next cycle. But then don't forget the final cycle, at least in terms of seasonality, is when October tends to be weaker. And I wouldn't be surprised if after this next cycle, after we approach this pivot point, we see another dip for the October period. That's what tends to happen, at least historically, before we continue to more bullish cycles like this. So something like this is going to be the most likely case, at least historically. How low will we go in October? I don't know for sure, but seasonality does suggest that's what's going to likely happen. So we'll see if we get one more relief rally to come very, very soon as the market's already dumped so much. FOMC could be the catalyst. The market may get a positive reaction initially to the cuts, but things could change once the economy starts to slow down and we enter the recession. So I think what's going to happen is the market's going to dip a little bit more, and then either CPI will be the catalyst to start causing this to maintain its bottom, or the FOMC will be the main catalyst to cause this to really start bouncing. It's going to most likely be one of those factors, so I find that to be the most likely possibility. And I think it makes a lot of sense at the same time. I don't think we're just going to continue to crash all the way down to our lows from before unless we get a very bad catalyst. And then in terms of our cycles, I think that that's the most likely phase. So that's what I'm seeing for SPY. Essentially, we dip a little bit towards FOMC. If not, the CPI reports, and then we try to rebound off one of those catalysts. The next cycle could turn back up temporarily, but if SPY does not break the highs, we could establish a lower high somewhere up here before we continue this next cycle down. And the big cycle for bearish momentum tends to be in October. So the first 1 to 2 weeks of October could be decent, and the last 2 to 3 weeks could be very bearish. And that's when we tend to see the most violent drop for the markets of the year. This tends to be it, followed by the end of the year recovery. What else could also trigger this period of downside could be the election. There's a lot of uncertainty about who's going to become the next president, and I think that's whether or not that happens could depend on a lot of different factors. But this period right over here towards like the last 10 days of October going to the very beginning of November, this is when we could be looking at the most risk and the most uncertainty. And that's when we can see the biggest downside period. So I think that's going to be when the market finds another big sell off, followed by a big rally to end the year. That's what my prediction is. For the QQQ, I'm seeing something very similar. So I think that the triple Q could be trying to base either at 444, if not the 440 area. That also aligns with our daily 200 EMA. So I think what's going to happen is this to the QQQ. We're going to continue this cycle like this. Let me just draw this out just to show it to you so it's more clear. And by the way, if you look at the cycles for this, right, here we had this like bearish cycle. Right over here, we had this bearish cycle. We had a bullish cycle. We pumped a bit, then dipped before we continued higher. So cycles don't have to be perfect. We were in a more bullish phase over here before we pumped and dumped just a little bit into this next cycle. This one was quite bullish. This one was quite bullish. As soon as we hit this next period right over here, we turned bearish here, back to bullish, and then back to bearish again. Then we could turn back to bullish temporarily before we continue the next cycle lower for October, going into the election, followed by an end of the year rally for 2 consecutive green cycles. So that's what I think is going on. I know it looks wild, right? The QQQ is crazy. Pumps, dumps, pumps, dumps, pumps, dumps. It's just wild. But that's basically what I'm presuming is going to happen for the end of the year. The market's going to enter this massive consolidation period before we start to see a very, very big reaction to a potential recession in early next year. That could be a big factor that affects us because when the Fed starts cutting, it's not going to affect the economy as much initially. Okay, the damage is being done by high interest rates, and they're going to maintain their high stance for many months to come. The damage will come as time goes on. And I think that a recession is bound to happen in early 2025. So my view of the markets is this. I think that it is possible we dip a little bit more. I think that the QQQ is going to be fighting for these levels right here. So 444 and then 440 is where I think we're going to be looking for our bottoms. I think that's where the QQQ will bottom, and we could see the bottom as early as next week. And then it depends on the cycle. So if we do come down to this period over here, we could start our rebound a week early, and then the cycle could be the thing that really helps this make a nice V-shaped recovery, at least an attempt to recover because of Jerome Powell and the FOMC meeting. So we have FOMC, which is when the cycle tends to expire. So that could be our big pivot point. And then, like I said before, October tends to be the more like bearish cycle before we see an end of the year rally. Our resistance can be right over here as well. So this aligns really nicely with this right here. This could be our resistance. So this is where we could rally to before we see another rejection. So we'll see how it goes, at least from that end. And then finally, I just want to add that when we take our very, very key Fibonacci retracement area, you will find that, we bounced off our 0.786 right over here, just like how we did for SPY. So if I start from like down here, actually, I think we exceeded the 0.786 just a little bit before we tried to see a rebound. So we saw a very big drop on the QQQ before we recovered. And then during our recovery run, if I redraw this like this, let me show you where we ran to. If we start from this top right here and we come back down to this low, we ran up to the 0.786. I think that's what I was looking for before we got this rejection. So the 0.283 retracement area aligns very nicely with about 443, very close to 444. So I presume 440 to 444 is going to be a very important area of interest for the QQQ. I wouldn't be surprised if we try to bounce off one of those levels before we see another very, very big pivot. So that's what I'm viewing for the markets. We're going to likely dip a little bit more approaching CPI. That could be the catalyst that kind of switches things. If not, FOMC, and then FOMC could really help this try to rally back up to this trend line before we see the next cycle lower, just like that of SPY. And then we will see what happens with the end of the year rally, depending on the election. But don't forget that we're going to be looking for a very, very big period of risk right over here. This is going to be during the election period. This is when the market may be very uncertain, very fearful about who's going to be president. So that is what could be about to happen, at least for the market moving forward. All right. So with that being said, guys, that's what I'm seeing, at least in terms of these cycles, in terms of what the market's doing. I don't think I'm going to go over any other ticker from this point on. I just want to kind of end the video quickly from here for the weekend. And I'll most definitely be back tomorrow to talk about SPY, AMD, NVIDIA, and much more tickers and many more details. Until then, I want to thank you all so much for listening. Please enjoy your weekends, and I'll see you guys very soon on the next one. Thank you for listening, and peace out.